Good morning. Welcome to Beyond the SEAF Model. I'm Jack Kosar. This is effective for the week of January 13th, 2025. Let's get started. SEAF signals for this week. We have communication services, consumer discretionary, and technology for the second consecutive week. As you can see here, though, the scores are lightening up a little bit, and we are very much weakening here on the trading week a bit for communication services. We're seeing a little bit of a jump in healthcare as it has come into fourth and is knocking on the door, very much being held back by its strategic quarter. We're going to highlight a little bit why that's important and why the SEAF model is doing what it is supposed to be doing. Materials here at last, again, being as our only avoid. And energy not really following through. As we've kind of been watching energy and healthcare increased flows over the last couple of weeks. Energy, a little bit of a rejection toward what we're looking at. But overall, nice to see the model continue with consecutive weeks with the top three signals. And let's get into our heat map. A little bit to discuss about trading, about flows. So as you can see here, overall, a little bit of a negative skew on the heat map. Seeing a lot more red in here, and that will come with, we've been seeing quite a bit of outflows for the last 8 days. The collective number for the 11 sector spiders is roughly 300 billion, or it has been over the last couple of weeks, plus or minus, some millions on either side. But overall, we've been in that $300 billion range. Of the last for the last 8 days, we've actually been trading with a net AUM under that $300 billion mark. Now, the reason this is important because prior to the 8 days, the previous 36 days, we've all traded over that $300 billion mark as a collective of the 11 sector spiders. What that tells me is we're very much on a teetering edge here in the broader market to understand where we are. With this money flows kind of floating up and down over that 300, some managers are obviously a little bit more risk averse and are pulling money out. As we can see here with the overall red, we did have a down week last week, negative 1.2%. Percent down for the week, much of that coming on Friday with a negative 1.23% out on Friday. So we are seeing negative bias in the flows. We are seeing those asset flows kind of teeter on that 300 billion mark. Definitely a decision point overall in the market. In terms of into weekly flows, negative pretty much across the board outside of healthcare. Healthcare coming in at 0.38%, pretty close to our 0.4%. That's important. We're starting to see that positive skew that I like to see. 10 on the street quarter, 2 on the tactical month, 1 on the trading week. What I did want to highlight is I wanted to bring up XLV chart. So we are seeing some positive relative outperformance here versus SPY. We are seeing a little bit of an uptrend after the broad downtrend that we see in the price chart. But the thing I do want to note is we are approaching some very heavy resistance that comes back to some pretty historical points here for XLV. So while we do see some positive momentum, we do see flows coming in. I just, as this is not a SEAF signal yet, for anybody that's thinking, hey, we're seeing flows coming into healthcare, just be aware that there is some upward resistance here in healthcare that we are starting to approach. Now, that does not mean that flows can't continue into healthcare and blow through those resistance marks, but just wanting to be aware that there is some upward resistance to keep an eye on as we are watching these flows. But with that being said, very strong flows for healthcare over the 2 time periods. It is ranked 4th overall, and we are showing it as a favored ranking. So, proceed with caution, but seeing some positive things in the healthcare space. Onto our rainbow charts. Consumer discretionary sitting in favor, but taking a little bit of, showing a little bit of weakness in terms of its score as we're heading down. Again, we are on a little bit of a decision point in the market, especially when it comes to asset flows. So just kind of, we'll be keeping an eye on these sectors as we're going forward. But consumer discretionary came in 3 at actually a net 0 on the week. We are seeing a slight little bit decline in the relative outperformance. Still favored, still a SEAF signal. Overall uptrend in the relative outperformance versus SPY for consumer discretionary. Looking at materials, materials was last. As you can see here, it continues down a trend. We are sitting in a bit neutral for materials. This is, and as we can see here, materials kind of has a little bit of a tighter range in terms of its performance, but definitely seeing some outflows, a little bit of stronger outflow on the tactical month, but negative across the board for materials, and we are seeing that in that relative underperformance part of the chart. Looking at technology, technology mostly sideways in the relative performance. I think we have a little bit slightly upward bias, which is nice. Sitting in that upper favored ranking, not as high as we would like to see for really that outperformance to happen. But we are seeing a broad, flat to slightly uppish relative outperformance for technology. It's actually third in the trading week, very much being held up by its tactical month. First on the tactical month in terms of its flows. We'll have to again, because we're on this kind of decision point, this is a little bit of a wait and see situation as where these things go, as the overall rankings are getting in that a little bit higher than we'd like to see. We do not have a true leader in the SEAF model at the moment. Looking into healthcare. Healthcare is interesting. As I mentioned, and I showed that price chart a little bit earlier, we are seeing some relative outperformance versus SPY in the last couple of, let's call it day or week, couple days or week. And we are starting to inch into this favored. Really we'll be looking for strong flows coming over the next couple of weeks, as we will need them to break that upward resistance that we see on the price chart. But some positive things happening in healthcare, which is nice to see after what was a really tough 2024 for healthcare, as we spent a good chunk of it in a underperformance trend versus SPY. Communication services. Communication services on a broad uptrend in the relative outperformance versus SPY, really going back to October of 2024. As you can see here, we have climbed up through from avoid to neutral to favored. This is a really nice pattern we like to see in the SEAF rainbow charts, as it tends to correlate with relative outperformance versus SPY. We are seeing it flatten out just a little bit as these flows have kind of tempered, but communication service is our top sector, 2, 3, 3 across the board when it comes to trading week, tactical month, and strategic quarter, and its ranking in flows. Still seeing, like I said, a positive trend in relative outperformance from communication services. The trading week was relatively soft, so we're going to want to revisit this next week and kind of see where we're at, but overall looking relatively positive on a relative performance side for communication services. That is all I have for this week. I look forward to breaking down the SEAF model with you all next week, and thank you.